Hello, everyone. Welcome to Just Begin, where we talk about starting a business or if we should start a business, especially while we're working a full time job. And tonight, I just kind of wanted to follow up on building a 700 or above credit score after filing for bankruptcy. So basically, I want to talk about how to rebuild your credit again. So we already discussed the FICO score in a previous video. We know that that's the score that you want to check. And you want to check the three credit bureaus. They will provide you with your FICO score. And the three different credit bureaus are Experian, TransUnion, and Equifax. And one of the ways that you want to rebuild your credit is to get some secured credit cards. And I know I mentioned previously that when you get secured credit cards, you want to get, I would say, either a Capital One secured credit card, a Navy Federal secured credit card, or a Discover It secured credit card. And the reason why I'm naming these three credit cards is because they graduate. So when you get a secured credit card, that means that you have to put money down, let's say $200. You have to put $200 down, and then the credit card issuer will give you a $200 balance. That's because you have to secure the credit line with your money. But you don't want to have to do that forever. So you want to choose a secured credit card that graduates. So once you put your $200 down and you keep your credit card for 6 to 9 months, then your money will be released and you will have an actual credit line that is not secured by your own money. Your money will be released back to you. And that's important because you don't, as you build your credit, you're going to qualify for regular credit cards, or I should say unsecured credit cards. So you will no longer have to put money down to get a credit line. So when you start to transition, especially when the goal is to have an above 700 credit score, you can just go ahead and apply for credit cards without having to secure it with your own cash. So while you're doing that, you don't also want to have a card that's secured. So the importance of that is having secured credit cards when you're starting to rebuild your credit that actually graduate, so you won't have to close out those credit card accounts. Does that make sense? You want to get to the point where all of your credit cards are unsecured. Okay, that's the goal, to have a above 700 credit score and all of your credit cards to actually be a credit line that's issued by the creditor. And you don't want to get secured credit cards that do not graduate to unsecured, because if you just keep them in your wallet, you'll have to keep money on it to have a balance. And you may not want to do that. That's not really the goal. And if you ever want to close out the account because you don't want any more secured credit cards, because now you qualify for unsecured credit cards, you're going to be penalized for closing out that credit line. So that's another thing I wanted to discuss. When you start opening these different accounts with these credit card companies, you want to make sure you're choosing good, reputable companies that you want to continue to do business with, even as your credit score increases. So that is my reason for recommending either a Navy Federal secured credit card, a Capital One secured credit card, or a Discover It credit card, because these cards graduate and those are good, reputable companies. And I know some people watching this video is going to say, why is she saying Capital One is reputable? Well, what I am saying is that they do report to all three credit bureaus. And if you pay your bill on time, your credit score will go up if you do business with that company, and their secured credit cards do graduate. So that's why I'm recommending them as well. So I kind of wanted to touch on the fact that I am recommending that you don't close credit accounts once you open them, when you are in this phase of rebuilding your credit. And you may not know this, but you will get penalized for closing accounts. That will actually drop your FICO score. And I know that's not what you want. What you want is to continue to rebuild your credit and to keep your credit score above 700. So you want to just choose companies that you do not have to close accounts with. And I wanted to touch on the secured loans. We spoke about that in a previous video where we talked about you have to put money down. Let's say it's a $200 loan. So you transfer $200 from your checking account to your savings account. That money will be put away. You will not be able to touch it. And then the lending institution, let's say your bank, will transfer, they will actually give you a loan for $200 and they'll put it in your checking account. And yes, it does look like you're moving $200 from your checking account to your savings account just for the bank to give you $200 all over again. It's just like moving $200 all over. And it is. But when you do that and you start to make your monthly payments for your secured loan, the bank will report those payments to all three credit bureaus, and that will help you boost your credit score. I just want you to be mindful that after that payment period is over, let's say you get, we'll use the same example, $200, you get a $200 secured loan. At the end of that period, whether it be 6 months, whether it be a year, when you're finished paying off that $200 loan, that $200 secured loan, usually the account will close. But because you really don't want accounts to be closed out, you may want to reinstate that loan, just start it all over again, and kind of do it until you have enough accounts where when that account closes, it won't affect your credit score negatively, because that will be one less account that's reporting in a positive fashion to all three credit bureaus. So just keep that in mind, because every little thing that you do, every little change that you make credit-wise could affect your credit score. So I just wanted to warn you against closing accounts. That does make your FICO score go down. And this would be a good time to remind you that yes, the goal is to keep your credit card limit at 7% or below, 7% of the credit line or below. And I mean, I know things happen. You may not be able to do that. So you may have to go up to 30% of credit usage. But once you start using above 30% of your credit line, your credit score could go down, and you don't want to risk your credit score dropping. So just be mindful of that. And then simple things like making all your credit card payments on time. You don't want to make any late payments, because late payments will cause you to have a decrease in your FICO score. And of course, that applies to your credit card, but it also applies to doctor's bills, like utility bills, like a cable bill, phone bills, and any type of tolls, anything that will cause you to have an outstanding account and them to report it to the credit bureau in a negative fashion will drop your FICO score. So I would hate for you to have a positive credit card standing and then forget about a toll or a doctor bill, and that be reported to the credit bureaus and it drops your score. So when you're in the phase of rebuilding your credit and you definitely want to keep it at 700 or above, you want to make sure that you are paying all of your bills on time. It is very, very important. And of course, I know that this channel is for business owners and for future business owners, but it's so important for business owners to have good credit, because you can leverage that good credit and get loans for your business, working capital for your business. So you can have money for marketing or really whatever you want to use it for. So it's very important to have good credit. And that's why I wanted to follow up with another video about credit, because, business owners do need to have good credit. But if you don't have good credit right now, don't panic, because there are ways to getting your credit up. And, I will periodically do credit videos, and I hope that you enjoy these videos. And I just want to remind you that I do have a group on Facebook called Just Boss Up. It is for business owners and for future business owners. And if you would like to join, just come on up to Facebook and just answer the questions and I'll let you in. I would love to talk with you. I am active in the group every day. If you can subscribe to my channel and give me a thumbs up, I'd really appreciate it. Have a good night.